What's up, everybody? It's your boy Shawn CPA coming back at you with another video. Today we're going to talk about how to report your investing activities such as stock and dividends on your taxes. Essentially, how do you even approach the whole what you do with your brokerage account for your taxes, your stock sales, dividends, bonds, interest, all that stuff. So let's just take it from the top. First of all, you're investing with some sort of brokerage, right? Whether that's Robinhood, Fidelity, Charles Schwab, Merrill Lynch, Wells Fargo, whatever it is. You're using a brokerage. At the end of the tax year, they total up all of your transactions, all of your income, expenses, whatever it may be. And then the next year, around February, January, they send you a 1099, right? So in 2021, you received your 1099 for your 2020 stock sales and dividends and interest and all that activity. What they typically send is a 1099 comp, which stands for 1099 composite. This has your 1099 int for interest, 1099 div for dividends, and any other 1099s that you would need to be issued in one. It's kind of like a package. It's usually 15 to can be like 80 pages depending on how much activity you had in your accounts. All this really does is it tells you, hey, here's how much interest you earned, assuming that you earned more than $10 of interest. That's a threshold. It's how much dividends you earned, but the important thing here is it's broken out towards ordinary dividends, qualified dividends, Section 199A dividends, non-dividend distributions, how much foreign tax did you pay, how much were foreign dividends, tax-exempt dividends, tax-exempt interest, or municipal interest, just everything, right? How much were your advisory fees that you paid to your brokerage? If you have like a financial advisor with them and they make trades for you, how much was that fee? How much which shares did you sell of stock? What was your basis? How much did you pay for that? How much did you get for it? What's the difference? Wash sales, long-term sales, short-term sales. Literally everything is on your 1099 comp. So for the average person, let's say you're just an individual, you have a W-2 job, maybe you get a 1099 NEC for some contract work on the side. Maybe you make like $5,000 a year driving for Uber or doing Uber Eats, DoorDash, something like that. Then you have your day job where you get your W-2. And let's say you have like a Robinhood investment account. The only difference to reporting your stock stuff is all you really have to do is, let's say you're using TurboTax or Free Tax USA, or you go to H&R Block. You just need your 1099 comp. 1099 composite, or your 1099 int, or your 1099 div. That has all the information. It's neatly laid out in boxes, right? This is why tax forms are designed a certain way. When you're entering your information, it'll say box 1, what's the number in there? Ordinary dividend, 7,000. How much of that was qualified dividends? 4,000. How much of it was foreign? And you need to have the breakout of $500 is foreign because there's certain credits you can get, such as the foreign tax credit to get back the foreign tax you paid investing in foreign securities and receiving dividends. And certain states have rules with dividends and bonds in certain other states or countries. Municipal bonds will give you tax-free interest in the state that they're from, but not in other states. Things like that, long-term sales after certain years, short-term sales after certain years can give you certain tax benefits in the state, depending on what state you live in, your tax residency, all that stuff. All this information, it sounds complicated, it sounds hard. It's literally all in your 1099 comp. So your tax process doesn't change, your workflow doesn't change. Just you take that 1099 comp and you enter in that information, or you give it to your CPA, your accountant, your H&R Block person, whoever does your taxes, you give that to them and they report all of it for you. I think there's this misconception, people have that reporting stock sales and these things are very difficult or like some huge burden. I've noticed my friends will ask me, oh man, like, hey, yeah, I'm going to probably pay more to get my taxes done this year because I had a couple, sales of stock. That's probably going to be a lot more work for the preparer. It's like, hey, it's going to come in a form. They're just going to type in what's on that form. There's not that much complexity that goes into reporting it. Now, if you have mass amounts of brokerage accounts, companies, pass-throughs, trusts, it can become a situation, right, to maximize these deductions and get the income reported in a way that's the most favorable to you. But for the average person, it doesn't add much complexity to your tax return. It's very easy to report. And that's, the beauty of the 1099 form system. It's all the information's there. Just, you might not understand how to interpret it, but typically everything's laid out like box 1, box 1A, box 2, 2A, 3, 4, 5, 6, 7, 8, and they're universal. As long as you can find that page, you can report everything properly. So pay attention to your 1099 comps. Basic stock transactions and dividends and stuff like that are not complicated for your taxes. They won't complicate your situation much. Doesn't really add any extra difficulty to the average tax return. And that's how you report that. If you were curious or needed to know, share this video if somebody else needs it. And if you need help with your tax situation, you need to do some tax planning or get your taxes done and optimized, hit me up. All of my contact information is in the description or in the pinned comment. You can use my company, Neutron Tax. Again, I'm Shawn Gill, CPA. If you have any comments, leave them below. I respond to all my comments. Give my video a thumbs up, subscribe, hit the bell notification, all that stuff. It helps my channel grow a lot, and I really appreciate it. Shawn Gill, CPA, out. I like Shawn.